Jonas, brother. Not Jonas Brothers, but Jonas. Question for you from Dane wants to know, I've started investing about 10 years ago. Honestly, I've never seen my portfolio look this good. I'm 55 and getting close to retirement. Now I'm wondering if I should lock in some of these gains while the market is high. Should I be taking some chips off the table?
Great question, Dane. A very popular question right now, actually. One thing that stands out to me is really, this is something that Roger said at one of our meetings, but market highs aren't a flaw, they're a feature of the market. And if we can take a deep dive, Dane, on when you're going to actually retire, that would be the most helpful thing. And once we do a retirement analysis, then we can come up and figure out how you can, what Warren Buffett said about investing is money in now for money out later. If we can do that retirement analysis. Another thing that stands out to me is after we do a financial strategy and we figure out your risk capacity, really you've only been investing right now for 10 years. If you plan on retiring in your 50s, one way to look at it, Dane, is you may not ever stop investing. If you have a very good financial plan and you're very comfortable with your portfolio, there's really no reason why you should ever stop investing. But we have a guide that's called Investor's Guide to Investing during market highs, which would be a great download for you. Couple of ways to think about this. If you look at your portfolio, what we try to do is we try to look at a meaningful period of time. And this is something, I think you put this together, Roger. This was pretty neat, and Molly, with Molly's help. But Halley's Comet, every 76 years. The Olympics are held every 2 years. There's a full moon every month. If you look at the stock market, there's new market highs dug every 19 days.
Which is remarkable.
And ultimately, Dane, you need to ask yourself, are you an investor or a day trader? And if you come in and get a financial strategy, most people end up being long-term investors at that point.
Yeah, and that's the point too. Is it's something where it's not a bad thing to take money off the table if you have it. I mean, when you say take money off the table, it's like let's sell some of that and then I'm going to buy something else with it. It's part of rebalancing.
There you go. I walked customers through this the other day. Mm-hmm. We set up a bucket strategy. I drew it up on my fancy vibe board that I have.
Vibe board.
And that's what it's called.
I love it.
It's for educators. Okay?
Yeah.
It is. It's in the schools. Promise. Drew the cash bucket.
Yeah.
Then I drew our income bucket and the growth bucket.
Mm.
And they just asked, how would this be a sustainable strategy? And I said, well, when growth investments go up, we move some of the growth funds over to the income bucket. They go, how do you do that? They said, it's called rebalancing. That's all it is. Shaving a little bit off and buying more income, which gives them increasing income over time, causes more cash into the cash bucket. Rebalancing is really what Dane should be doing, not trying to determine whether to get in or get out. Rebalancing is taking chips off the table. Jonas mentioned figuring out your risk capacity. Well, if he's 80% stocks and 20% bonds, he would sell some stocks and buy a few more bonds. Pretty simple. And that's the way to take chips off the table and actually add chips to the table when the market's down too.
Mm-hmm. Dane actually reminds me of a younger version of Doug.
Oh, well then.
You said the same thing earlier in the episode, that your portfolio has never looked so good.
Better, yeah. I'm at this point where things I look at the difference when there's a change. And again, I haven't seen a negative one in a while, but I look at the sheer number, not percentage change, but the number, the dollar amount in there, and it's really makes me happy.
And now it's time for you to schedule your rebalancing appointment.
Oh, yep, exactly. No, sorry about that. That's a very good point, and I'm going to have to do that with Mark. And also in my 401k, too.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs, and does not assure a profit or protect against loss. Premier Investments in Wealth Management and LPL Financial do not provide specific individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. Forbes' Best in State Wealth Management Team's ranking was developed by Shook Research and is based on in-person, virtual, and telephone due diligence meetings and a ranking algorithm that includes a measure of each team's best practices, client retention, industry experience, review of compliance records, firm nominations, and quantitative criteria, including assets under management and revenue generated for their firms. Investment performance is not a criterion because client objectives and risk tolerances vary, and advisors rarely have audited performance reports. Shook's research and rankings provide opinions intended to help investors choose the right financial advisor and team, and are not indicative of future performance or representative of any one client's experience. Past performance is not an indication of future results. Neither Forbes nor Shook Research receive compensation in exchange for placement on the ranking. For more information, please see www.shookresearch.com. Shook is a registered trademark of Shook Research, LLC.